Well, welcome back, everybody. In this shortened week of trade with Thanksgiving holiday in the U.S., markets have decided to continue the consolidation pattern and continue to rise. We saw the SPY test that 400 area today. Let's go take a look at the charts right now and see where we're at. What you're looking at right now is a lot of lines on the screen, that's for sure. It's a volume-weighted average price cone for the S&P 500, and what you're effectively looking at is the black line is the SPY, and it's above the month-to-date VWAP. Some of these horizontal, colorful lines that are running through the screen are pivot lines on the week, and we're above the balance area. Very close to breaking out into being one standard deviation or more above that month-to-date VWAP, which puts us in the uptrend zone. Now, looked at another way, the S&P 500, which is in a downtrend channel on the year, has come from the lows back over here in the middle of October and rising towards the top of that channel over the last, let's call it week and a half, through the less hot or cooler CPI data and PPI data that has come out. Markets have been consolidating, potentially in a bull flag. You could even potentially draw a line over here and a line over there and call it a coil, and look at this market as breaking out of a coil. As you heard on Rob's video, hey, the market may be coiling up for a bigger move. Caution, it could be a bigger move up, or based on how we've seen the movie play out before, which is middle of August, hit the top of the channel and come down. Of course, end of March, hit the top of the channel and come down. So we're in a spot where economics does not necessarily provide us a reason for up, and away. Earnings does not necessarily provide us a reason. But folks are a little more complacent, with this push up to the highs. And truth be told, we are holding at and underneath that downward sloping year-to-date channel top for longer than we've had, instances in the past, i.e. August and March of this year. So today we've got a push up, and that push up is coming above the center of those pivot lines. We tagged the 400 area. 400 is formidable resistance, and to be technically sufficient for a breakout, we really do need to see this box effectively that we've been trading in for price to break above it. Now, there's a little fly in the ointment, and that's called the dollar, which tomorrow, in the early wee hours of the morning, we get Eurozone manufacturing data. Now, the data is not likely to delight, it's more likely to disappoint. That more likely sets the stage for what? Well, it sets the stage for the euro to go down and potentially the dollar to come back up. So if you look carefully at the dollar, we know it's inversely correlated with equities. We know that when the dollar rises, typically in this market, there's a better chance for equities to come down. Now, we had this overcorrection and a big move down on the dollar, and that happened when? Well, that happened through the CPI and the PPI data coming in cooler, and that overcorrection led to a very sharp bounce up on Monday, a little give back today, but look at where we're coming down to. The top end of this overcorrection bottoming area, we've kind of tested the neckline of it and didn't fall into it. So if you take the bigger picture view on the dollar, it's coming down to the bottom of a longer term uptrend channel and holding, trying to lift off. So the Eurozone data tomorrow breaks between 3:15 a.m. and 4 a.m. Eastern time, and it effectively could act as that wrecking ball. Now, in markets today, we saw a risk-on start and a potential for the market to rise, and I did some live trading in front of members in my live cash account, and I continue to reinforce the idea that we're coming up into an area where technical signals suggest the momentum is still intact, but we've got to be very careful because we know we're near the top end of that downward sloping channel. And we've seen what's happened the last couple of times there. It's not as if we've got necessarily a better economic stance or earnings stance even to support a breakout and run. I'm not going to argue with it if prices do decide to break above there, but I need to see that proof because we are in a stretched market, and the specter of the dollar rising tomorrow is something that is a cautionary tale for me. Now, this morning and in live markets today, I was able to do some great live trading in front of active trader room members, and I used an indicator that I've developed called the Triple S. It's a simplified swing signal indicator. You're looking at the ES. I've actually got the MES here for chart purposes, but I was trading the ES in front of the group earlier today, and what I did was I put it on a 1 minute chart to get real granularity out there and noted that we started an uptrend about 3:45 a.m. Eastern. We were oscillating through that uptrend in the overnight session. As we approached the open together in this area, we noted that at that point in time, the triple S indicator got deeply oversold and came to an important area in the big horizontal lines, that channel running through the bottom of the screen. That's a balance area. And we were looking for a bounce off of it. So we saw that play out. We went into a buy zone on the champion trend, got into the uptrend channel, was able to take some longs on in front of the group and play them out, and of course then look for another push up towards the top of the channel. Now as we moved into the end of the day, and we were looking for the markets to continue rising into the end of the day, for the SPY to come and tag that 400 area, the ES to come tag the 4,000 and teens, which it was able to get up into. The high on the day was 4,012 and a half technically. Also the 4,000 and tweens. When we get into the upper half of the channel from the buy zone here, we note that the triple S indicator on that 1 minute time frame, that red line came off the bottom of the upward sloping channel, gave us all the bullish crosses we need to say, hey, it's likely a liftoff move, and we can have a little bit of up as we move into the last hour of trade. So we saw that signal emerge in and around the 2:40-ish p.m. marker, and of course the rest is history. We drifted higher and then plateaued into the end of the day. So members got to see me do some great live trading today. They also got to see the indicator in action, and they got to see how it speaks about the days ahead. So that's a lot of what I'm going to be talking about in a very special session this Friday. So this Friday at 10 a.m. Eastern Time, Lori, our resident options and stocks expert, is going to be joining me. We're going to be doing a two-part training. Lori will be speaking first and giving you his view on markets and trade ideas using the options tools in wealth charts and his techniques and strategies. I'll be coming in about an hour into that presentation, closer to 11 a.m. Eastern Time, and I'll be giving you a sense of the current market dynamic into the end of the week, and as we move into December, I'll be using a suite of tools and approach that I use in my live trading each day in front of active Trader Room members. It's going to be a great educational session. It's a do not miss session for active traders that are looking for both day and swing trading insights, tools, techniques, and strategies to increase their probability of success. I hope you've enjoyed this video. I'm looking very much forward to seeing you on Friday, November the 25th. 10 a.m. is when we start. Simply go to becomebettertrader.com/yes to get your seat in advance, and we look forward to seeing you there. Have a wonderful rest of your day, and thanks for watching.